Recording this. Okay, so we've got the market is in bullish normal conditions on an annual basis using weekly RSI 14. We're at the higher end of neutral at 58 out of 100. 10-day NDX for the shorter term market condition shows overbought at 99 out of 100. Using the market mosaic, price relative to the 200-day moving average is yellow bullish. It's improved to 5.01%. So we're 3% above the sideways condition. The 5-day slope of the 50 has improved to white bullish at 0.32. ADX is a very weak 12. That's important because if we get a swing move continuing this week, there's a lot of room for this to run. So if price were able to get above 211 in SPY, we're going to be well positioned for a nice upward swing after the sideways chop of the last 45 days. The risk index is the 30-period moving average of the VIX divided by the 10. The threshold between risk on and risk off is 1.0, and the current reading is 1.03. So that puts us into risk on conditions. When we take that score of 1.03, compare it to the last 5,000 trading days, we find the average and the standard deviation. That gives us the risk Z, which right now is 0.31. So that's 0.31 standard deviations above the long-term historical average. You can see the 90-day time series in that indicator here. We put in a double bottom as we've been chopping around, and now we've started to move out into the green with the decline in volatility. That has corresponded with a 12% move in the ETF XIV. So we've been enjoying that swing trade in the intraday trade in XIV this past week. Blended monthly rebalancing, you can see the positions we're holding. Next rebalancing is due on or about 1 May. You can see now the leaders in the different portfolio sets that we track as of Friday's close of business. In ETF 2, the theoretical exposure is now up to 100% with all the indexes in the world above their 4-month moving average. Our model portfolio will be at 100% exposed when it adds one position on Monday morning in China, MCHI. We had one more slot open up in the Kansas City workshop, both for the research weekend and the live trade. So if you're interested, please give me an email at longke@yahoo. We still have time for you to get on board. That promises to be a good time. Just a quick look at the ETF portfolios for blended monthly rebalancing. What I've added to the spreadsheet and to the report is the 1 week and the 1 month percent return. I have them weighted at 0 right now because our protocol is to take 70% of the 3-month and 30% of the 6-month to come up with the blend. But I thought it'd be useful perhaps to show the shorter term time frames to see if we might look at some trade framing on the basis of BMR strength and then looking for some anomalies or some pullbacks. You can see all of the ETF 13 and all of the 32 ETF, with the exception of real estate, are on buy signals. At the top of the stack, Japan and then the Russell Small Caps, IWM, which have taken over the U.S. leadership role from the large caps, which are now lagging. And you can also see that Brazil and the commodities, agriculture and gold, are all still near the bottom of the stack. Let's see, in the ETF Max, China, biotechs, more China financials. You can see China is just all over the place on the upside here. And in the S&P 500, I've also added that 1 week percentage and 1 month percentage to our blended monthly to give us some insights. Under Armour looks interesting to me here. That's greens across the board on the 1 week, 1 month, and the 3 month. So that's really moving up smartly, as is Netflix, which has had quite an extraordinary run here over the last 1 month and 1 week and the 3 months. So some very interesting positions there. Darden Restaurants might be of interest also. Straight greens across the board. And Analog Devices ADI also looking to be pretty interesting. Next up is the market health check. The vertical blue lines are 10 days, 20 days, and 30 days. That's the thick blue, and then 60 days is the second thick blue. The horizontal red lines are support levels that used to be resistance levels, and then if price were to fail here, those become price targets on the way down. You can see that price is leaving the river and testing this double top up here around the swing target of about 211 and some change. Price really has to get above 211.5 to make an all-time new high and really to be convincing. But I want you to notice the dragon, which is this red shaded area, the 10-period Bollinger Band plus or minus a half, has put in this double bottom back here in January, a nice move, and now has actually made 2 higher lows in the dragon at the edge of the river and bounced. And so if we can get through 211, this is where the market is well postured to take advantage of this consolidation zone. You can see we're temporarily overbought, but the jaws of PPO have opened to the upside, and there's plenty of room to run with the ADX down here below 15, and with the bulls in charge, this is well positioned for an extension beyond 211. If we get that, then it's all systems go. The sine wave looking line right here is the 30-period regression line slope value, and it oscillates. The 2 extreme readings on it are 0.4 to the upside and minus 0.22 to the downside. If you get readings outside of that range, it becomes a significant turning point when it rolls over. The last time it did that, last 2 times you can see, it was at 0.4 here at the end of February, and when it rolled over, it had a sharp collapse. And then the time before that, it was down here at minus 0.22 again. It was at an extreme, and then when that reversed, that led to a nice sharp move up. So what we've had in this most recent one was a swing down here to just about minus 0.15, not extreme, but certainly in the bottom of that channel. And now we're getting ready to cross this dotted 0 line with this with the slope of this 30-period regression line. So when you look at this set of higher lows, it's found support at the edge of the river a couple times, and now it's postured to take out the swing high. That's why I think the seeds have been sown for a potentially really nice swing to the upside. We are into the green zone, which is where I have a intraday bias for the long side. If we're in the yellow, then that's where I wait for the market to show me the way each day for the intraday trade. But right now I have a long side bias because of this. The last 3 days are really solid. Actually, last 5 days of really solid moves from the bottom of the river. All right, moving on. Next up is the ETF2 regional report. You can see all the indexes are on buy signals, so that puts us at 100% invested, 0% cash in the allocation strategy. EFA is better than the SPY right now, so the globals at 64 strength are better than the U.S. at 58 strength. Inside the U.S., it's the small caps at 64, the mid caps at 63, then technology at 60, and then large caps at 58, which completely reverses the trends from last year intra-U.S. Japan and EWJ, which is EWJ, Japan and the U.S. large caps are still strong. The U.S. Small caps, and then Latin America at 45, and then the U.S. large caps are the two weakest sectors. In the world market model, let me let that come up on your screen. There we are. All of the U.S. above average. Japan, China, Hong Kong, Germany, and Netherlands all well above average in the green. Laggards are Brazil, Latin America, oil and commodities, and Vietnam. Below average Malaysia, Singapore. You can see the whole commodity stack. So this is the interesting divergence to me is this the Latin American Brazil, which are just getting still slaughtered. But emerging markets are actually back above the database average. So there you are. ETF2 lens, looking at the world here, reinforces what we saw in the BMR. The new members to the party: Hong Kong, Japan. These are the ones that are green on strength and white on consistency. So Hong Kong, Japan, even Russia is of interest here. This the rebound in oil being green and yellow is pretty interesting. So I'll be looking at ERUS and also RSX. Meanwhile, Pacific Stock ETF, Netherlands, Italy, U.S. small cap growth, Germany, Japan, Hong Kong. Meanwhile, the key leaders in biotech in China, this is the MCHI that we're adding that position in the ETF2 system. All right, we're going to shift to the daily report. Now we've got a. I'm going to let that come up on your screen. On the daily report, we've got a short signal in Latin America. I would wait to see failure before I took that. I would not short that right at the open. But what I'd be looking for is weakness in the market and then more weakness in Latin America. Then I would pile on that one for the intraday short rather than just taking the short now. You can see we've got just a handful of swing patterns in channeling. And overreaction, that's treasuries, and that should read IYR, excuse me, that should read IYR, the U.S. real estate. We got Walmart channeling in the large caps. That should be interesting. Take a look at that. We're going to take a look at that chart under charts of interest, along with IYR and MCHI. The VIX and the AG ETF are both 5DD. In the auto framer VIX, UnitedHealth, Walmart, DBA, and Travelers. So we'll take a look at Travelers also. You can see in the Dow Tactical Summary, we have only Walmart is channeling. It's a max pain range compression, number one. It's also tests out a 3.6 to 1 on the auto framer. Travelers is a 2.2 and ended Friday in the doji. UnitedHealth is at 3.7 to 1. Now, what makes UnitedHealth interesting here is that it's been such a dominant player in a 3-month, 6-month, and 12-month time frame, and yet it was up on Friday. So UnitedHealth is certainly on the short list. The real interesting one, and we talked about it in the chat room this week, was General Electric with their announcing their little buyback. A 10% move in General Electric is an enormous vote of confidence, and has such a contribution to the U.S. indexes that's an important bellwether for the long term. GE is now in play, especially at just $28 a share. In the ETF 30 Tactical Summary, we've got a couple channelings here. As you can see in Treasuries in Latin America, the VIX is signal on the 5-day down, as is DBA, and they both test out better than 2-to-1 on the auto framer. XIV has just had a tremendous run here. You can see it's leaving everything else behind right now on its 1-day, 10-day, 1 month. I mean, it's up 16% in 10 days. So those are swings that can be taken advantage of, and in which that our little risk Z gives us a nice heads up when it's well postured for that kind of swing move. All right, moving on. The last one here, just looking at the auto framer for all the key stats for the VIX, UnitedHealth, Walmart, agriculture, and travelers. And then the regression line fractal framework. The top stack are the ones from each of these populations where they're the most numbers of their own ATR below their RL270. So we'll just take a look at Alcoa and Microsoft, and then Walmart. I like Walmart because that's on the list up here for the auto framer, and it's also 4 ATR below its own long-term fair value, which we treat as the RL270. And then the ones that are the most above their own RL270, these are the relative strength leaders. General Electric has now moved to the top. It's 4 ATR ahead of its fair value based on that 10% pop on Friday. Boeing, Pfizer, IBM, and McDonald's. So let's take a look at some charts of interest now. Let me get that set up. Excuse me. Okay, so let's first look at this was XIV 3 minutes, the 3-minute chart on Friday, and this one was basically the only trade I did on Friday was working this series. It gapped up from the opening. We got the when it made a new high, we were in here, and then basically we're able to ride this with a couple of additional positions here and here, and then cash later in the afternoon. So just a really positive move on the short term. So that's part of me having that long side bias when we're in the green zone and the market's behaving well. Then XIV becomes one of my go-to intraday targets to reinforce my longer positions. And you can see the price with respect to its own 270 right here. That's not a daily 270. That's using the 3-minute chart. But anytime it's above that line, this is really favorable. All right. Let's. I want to shift back to daily, so we can maybe take a look at some of the swing frames on this one. This is XIV's daily swing, and so you can see that we are. We first highlighted this one. I want you to notice the power of the 270 on this one. This is essential. This whole period of time, when it right out in here where I'm highlighting in yellow, it crossed below its 270, and it's been below its 270 for 5 months. Now, these extreme moves down here, this was a nice move in the VIX, but right in here we get this this RLL, the RLFF strategy. When you see the 10-period regression line divergence from the 270, that creates the opportunity for rebound. I want you to notice how it comes back to the 270 and then stalls, gives another excursion here, tries to come back to the 270 and stalls, and then the third time it gets back to the 270, and now this time, instead of failing and rolling over, now what we're getting is the beginning of this expansion to the upside. That's a change in the volatility regime that really favors the long side, and this has been a really nice swing move. I just want you to notice this move is from 26 to 40 in a 5-week time frame, with a very orderly moves, and you can see the RLCO patterns. And now we're up here by this Z plus 3. Well, we're at a crucial state right here. If it gets above 40, then the market is really poised for a strong next leg. So let's see here. I want you to notice this resistance level here. So if we get a failure at this price level, then the 270 is back here around 33, and the Bollinger Band mean is around 34.5. So we have this orderly price ladder to the downside. But were this to break out, what I do is I take this distance from the last excursion, which is from 25 to 37. That's a $12 move. Then I take $12 and add it to 33. And that gives us a target move of 45. So if it breaks above this key resistance level here, then we're looking at 45 on the upside. So that's still a significant move is available for us here. All right, let's take a look at some of the other trade frames shorter term. Let's take a look at Walmart. Now this is nice. So what we have in Walmart now is a nice support level being placed in here. We got 2 dots on the downside from the parabolic, so that tells us we ought to be stalking to the upside. So if I can get it above about 81, my targets are up here around 82.40, far side of the river, and then the fair value is up here around 85. Now, notice that it's that fair value has rolled over. It's kind of at the 12 o'clock position, as we would call it. So the natural, easy to believe in move is simply a recovery back to that level. So if I can get it at about 81 with about a 50-cent stop, I'm looking for targets here, here, and then back up to the RL270. That's a 4 ATR move. So you could actually use a 2 ATR stop down here in Walmart, and you would be in good shape on your 2 units of reward to 1 of risk. So Walmart looks interesting to me. We want to take Travelers, was also on the swing trade list, so let's take a look at Travelers. The Travelers is interesting because it was positive on the 1 week, the 10-day, the 1 month, 3 month, 6 month, and but it's been pretty choppy. So we have an opportunity here to do a trade frame with these higher lows are very attractive. This little step function, and yet we're getting it after this recent pullback. But then 2 days of health. So if we'd be looking to enter above, taking out yesterday's high and looking to get back up here around 110 in Travelers. That would be a very easy to believe in move. If it gets above 110.50, then off it goes, and then this longer term fair value is still in play. Let's look at UnitedHealth next, UNH. UNH in nice posture here. This has had a very orderly run, and it's had a pullback from that recent spike up to 124. But this long-term trend line is still well in place, as you can see from the slope of the 270. Just continues to rise. The slope of the river continues to rise and has been support. So it's found support here. You could have a stop underneath the Bollinger Band mean. And really, if we get above 124, then off it goes. You know, strongest stock and what had been the strongest in the strongest sector. Let's see. So earnings on 16 April. So there will be some volatility in this rascal. But again, I really like the trend of that river, and it will stay that way until it fails. So that one looks favorable to me. Let's see. Let's take a look at MCHI. That's that Chinese ETF. Yeah. Well, this is one where the ETF system says we have to get back onto it. However, I would also be prepared to play this one on a tighter tactical time frame on a failure here. If we get failure into this region, let's say below 60.40, which is back to the Z plus 2. So we have the Z trade here. This failure, the target, is back here around 53. So everything in China is perking up. And I think this has something to do with that the announcement of that the Asian Investment Infrastructure Bank that is jockeying to replace the U.S.-dominated World Bank and International Monetary Fund for developing the Asian economic area. So China is posturing itself to take over some of that financial leadership in that region, and there's just about nothing the U.S. can do about that, in my view. It's a portent of things to come, and there's strength in China across the board. So I think it's back on the table for longer-term holdings. Let's see if we have any other ones here. Okay, that's everything I wanted to look at. I'll have this recording posted at YouTube shortly. The executive summary of the reports is already uploaded there, and I'll post both of those links into the chat room. In the chat room is also a link to a 90-minute coaching session I did with Kieran and Catherine and myself on Friday night. I think there's a lot of good material in there, very worthwhile, on the process of trading, and then some ideas that we're working on in our little like Muppet Labs. There's some things that we're working on to present in Kansas City in June at our live trading workshop and the research weekend. Remember, we're going to be recording all that, so if you can't make it to the workshop, we're going to record all of the presentations, put together a workbook and a video DVD for people who want to help us offset the cost of the conference and essentially be distance learners. So that's going to be available to you this year. First time that we're doing that. Okay, that's everything I wanted to cover. So this is Ken from Kansas City. Keep your powder dry and your risk measured, and we'll see you in the chat room.